What is going on, everybody? In this video, we're giving a state of the market and stock picks for July 20th, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day in the week ahead in this phenomenal market. So today, it looks like we had a bit of a breakout. We are still currently holding under 39.52. Which is roughly where that 50 EMA is sitting. Being said, potentially, if you want to look at this technical wise, something I've always talked about, after a break of the 20 EMA, we did hit the 50. We'll retest the 20. Is typically what happens. Now, I haven't really been talking about this in a while because technical wise, nothing is played out. But considering that we are getting some positive data, and I think one of the biggest data points that we've been having today, not data, but in the EU, they've been currently dealing with pipelines, and I guess there was some positive news that came out today. They've been doing maintenance over 10 days, and what happened is that on Thursday, I think they're supposed to finalize what is going on. Thursday morning, I believe. That's also when the ECB comes out with their rates as well. And so the oil thing is a big issue and could turn into something big if they can't get the oil back up and running through those pipelines. But we have to see if that's the case or not. Nonetheless, we're in earnings mode, and we started to really push up even after hours. Netflix, they did well. I guess you could say the thing is the expectations were so extremely low for Netflix that anything was a positive, and they also made out because of the dollar being so strong that it allowed Netflix to really come out on top. Now they could have decent earnings. I think their subscriber count was still like, I think they were expecting like 2 million subscribers lost or something like that, and they only lost 1 million. So I guess that's a positive. That's kind of telling you what we're dealing with at this point. Again. But that being said, the market is looking pretty decently strong, and even coming into this point, there's a lot of data that does look good. But my concern is the core CPI at 9.1 and what the Fed is going to do at this point, because that core is really what is going to be the issue. And you still have all these other companies cutting back. Apple just announced cutbacks yesterday. Why is everybody cutting back? Why is there stock splits, right? What else are we going to see that could potentially sell us off more? If it wasn't for the Fed trying to come in at 75 points or higher, in my opinion, I think we would be fine. In my opinion, I think I would be bullish at this point. I was bullish almost until about a week or so ago. Then there was a lot of data that was coming out that was just showing bad signs. And so right now the market is recovering. It was great. We have a breakout, but something I've always talked about is these breakouts, they just haven't worked. I don't know how many different trend line or channels I've drawn, and we've broken out and just either one pulled right back in or pulled right back in and then continued the channel is typically what we've been seeing. Yes, we have been a downtrend for a very long time. It will take earnings to pop us up, some good earnings. If Tesla gets good earnings, I think we could rip. Again, we do have that hard ceiling at the 40, around that, we'll go 40.60 mark right there. You do have the weekly and the 20 EMA there. You're currently sitting close to the 50 EMA at 4K. Could get a hard rejection. It will get a hard rejection there. Get rejected harder once, twice. It could potentially get a hard rejection because it's a break as well. So hard rejection could pull back tomorrow. But then you have to realize that you have Tesla tomorrow, which could pop us up. Tesla earnings tomorrow is really it's going to matter. ASML earnings first thing pre-market's going to matter tomorrow as well. Chips have been doing really well, so look for kind of continuation on the chips. Looking for Tesla to hopefully do well, and seeing some of these companies do well leads me to believe that Tesla could. But if they are doing well, what really is the stipulation, right? Even though they beat expectations, the problem is that again, there's some underlying issue there, right? There's some underlying issue in the fact that what you're seeing is really bad or really really crappy expectations for what's coming in. And so again, any positive, any hope the market's going to rip, especially at a time like this. And again, I would be that's the typically way I've been playing, is that if there's any kind of hopium and just go off the expectations, if we beat it, then the market's going to ride that out. And that's kind of what I've been doing up to this point till about a week and a half ago. And then right now, again, with that core CPI, I'm more concerned about what the Fed is going to do, because the Fed will drive down the market. The Fed continues to raise higher rates. You know, this stuff is only going to get worse, right? Like, you're only going to get more unemployment. You're only going to get other issues, other cascading issues that are going to happen. And people are going to be fearful to buy. Then if you have no buyers, right, that could potentially start leaking into Q3 earnings pretty heavily. Right, we started to see some of this taper off towards the end of Q2. Now we're really starting to see this Q3, Apple coming out Q3 saying that they're starting to dial back. There's something they are seeing that leads them to believe that things are going to get bad going forward. Now, a recession, we could be currently in a recession, but we have to see once that word recession is whispered, and there was talks about, well, that we might not be in a recession. And this is what is very confusing, is that the talks defining a recession and GDP growth should be 2 bad quarters in a row. Typically is how they say they judge growth, and then other people say, no, that's not the way it's judged. So it's really just trying to determine, okay, well, what else can we go off of? We can go off of the earnings. Earnings are doing good so far. We'll see tomorrow, ultimately, with Tesla. If Tesla does well, then I expect the other techs to do well. I expect we could go into a big rip if that's the case, if Tesla does do well. But again, my concern is what's kind of the black cloud over the whole situation is that core CPI being on 9.1. What is the Fed going to do? And then Thursday morning, we'll be able to kind of determine what that case is with the ECB and what they do with their rates moving forward. Because there was rumor this morning that they are planning to be hawkish, and then that kind of started the market in a panic, and then the market turned and started ripping back up shortly after that. So again, we'll have to see. Technical wise, again, you have some levels here we need to break. We could go back up. Again, this is a higher low. Could be a bear flag on the daily. Really have to see. But if you start looking at the weekly, where's the weekly resistance? The weekly resistance is up here at the 40.57. Right, we had that break, and we've never actually gone and retested the weekly yet. As soon as we get up that point, I mean, that's a big, huge rally. I wouldn't say it's not a huge rally, because that is a huge rally. If we did break this, it's a huge rally back up. And again, every breakout is normally supposed to retrace 75%, but we haven't been getting that. Is this the time where it turns around? It's possible, right? If it wasn't for the looming Fed around the corner, I would say yes, it'd be very much possible that we could be in we will be in a bullish rally, but every bullish rally is going to be very short term. I think even to get back to all-time highs, it's going to be a very choppy road. But being said, we're going to still have to see. I wouldn't jump too soon on these things because, again, nothing is some more bad data. We are in earnings mode. You have to remember, earnings mode, you will get massive pumps like this, and then it just dumps. Or you get this nice candle like, ooh, it's breaking out, and then tomorrow we land back down here at the 38.74, and then bam, right back into the channel and continue the pattern down. So you have to be careful of that. going forward. So that weekly, again, this is really tough support up here. And you got the weekly and the monthly 20 EMA. So those are concerning spots here. Again, you had the break. This break was really weird because we spent the whole month down here and we ripped back up, back over the 20, because this 20 was actually down here. I remember this. We started pushing and then we just sunk, and then we sunk even more. So you have to be mindful of that. Any of these rallies, I don't think we're going all-time highs. I think there's just too much play right now. I think we might need another quarter. Again, if inflation is going to be high, and really, again, my bet is on the Fed. If the Fed can't get it together, if the Fed can continue to front run this thing, it could get really bad, right? If we actually adjust this to the monthly, oops, let's not do that. Let's just make this active. If we adjust the monthly, right, we're still in the channel. So very strong possibilities could hit and drop. But again, we have to see. We have to see what happens with this moving forward. So we're in an interesting spot. Again, I think we could rally up to that. Again, if it does rally, that's still we got 120 points to the upside we could get, which, you know, we need some sort of rally, right? We don't want to just continue to sell off. We want bounces to potentially break us back out. We have to see this. We are just 2 weeks into Q3, so and just getting an earnings. So this earnings mode, if we get a positive, we could potentially run up to here. We're trying to build margin going into next week. It'd be nice if we can get up here by when that happens. And we are getting a lot of momentum up to that side. Again, tomorrow, if we can break up above the 39.50, if we can gap up, we could potentially start seeing this again. Although we just broke, I could see us at least coming down and retesting this tomorrow before we try to run through it. But again, we have to see. And you have to remember that these rallies, you get about 2 or 3, 4 rallies, and you're going to get a pullback. So we got about 2-day rally here. We got a little bit of pullback scare yesterday. And then we'll see what happens from this point. Again, I think that's really going to be purely on how Tesla does. If Tesla does good, I think we're going to be up here back at the 40.50 again, and then leading into, which puts us around the 50-point basis move here, and then leading into the Fed. If they say 75, then you're going to be right back down here. And then again, 100, it's going to be a really big drop if they say 100, which the Fed futures have been dialing back ever since last week. We had that big scare last week with core, and then 100 points was nothing, and then we had that core, and then the odds of 100-point basis move jumped up to like over 60%. And then ever since the Fed came on and said, no, we're good. It's only going to be, I think they said 75 at least, which is still a lot. Especially, it's not really a lot, but at the pace that we're going, it is a lot and very fast. And so that is the issue. So we will see. We'll see where we land tomorrow. Expecting a pullback again to the 3,900, and then from that point, continue to push up and see where we go. Bitcoin doing very well so far on the daily. Daily looks like we could be potentially breaking here. Potentially breaking here. So we have to see what the case is with this. Again, first, we haven't really retested this 50 either, right? It's something I talked about. You break the 50, then you broke all the way down past the 20, and now you're starting to get momentum. Any kind of momentum, I wouldn't believe it unless we had multiple day runners and we started breaking back up. Right now, we're just too low. Right now, there's just too much bad data. There's a bad sentiment in the market still, but it could be promising to try to grab the bottom. Like I said, if you're slowly accumulating, that's fine. But for me, I'm definitely waiting for more confirmation on stuff starting to switch over. If you don't get that, it's going to be an issue, in my opinion. So, and then recession fears, right? And we're already kind of seeing the beginnings of that stuff. So again, right now it looks good though, but we'll see what happens. we have to remind ourselves we had these double pumps, which you saw the double bump, and then you had a nice rip, and then we just sold all the way off. So that's something else to keep in mind. Again, I don't think we're hitting all-time highs until Q4 potentially. We got to get to the points where the Fed starts toning down on rate raises, and I think at that point we should be good. But it really again depends on where we go, what happens with the ECB and the global wise, right? Because it's a global issue right now, and so we'll see what happens there. Tesla going into tomorrow, this thing looks like it broke out, right? It broke and retested, and it tried to run today. He's having trouble trying to break this 741. We'll see if we can break that tomorrow, and then continue to try to rip through here. We got the 20 EMA monthly up here at the 760. So trying to see if we can break that and rip out as there as well. Google, interesting. This one start ripping, potentially can get up to 119 tomorrow. If it breaks that, again, we could start, once we start breaking these levels, when I talk about a possible reversal, if Google can get back over 124, in my mind, that we're looking for a reversal here, and we could potentially start heading higher. So I'm starting to look at that kind of stuff. You need to break out. Consolidation is great. Normally, I like playing consolidation, but when you're going to the downside, when I play consolidation, I normally play shares. But when you're playing it to where the sentiment of the market is bearish, right? Like, obviously, you're not going to be buying these consolidations. Maybe it'll break out. More than likely, the overall sentiment is down. So you're going to get chop. You get a false breakout, and then you get slammed back down, false breakout, slam back down, and continue to sell. And again, I think we're going to continue to see a lot of that. Again, just really depends. A lot of this, and this is what's funny, is a lot of this isn't making sense because every world economist essentially that came into the core CPI was wrong. And you're seeing inflation jump to other different things. It's not just like used cars were absolutely ridiculous a couple months ago. Now they've come way down, but like maintenance has gone way up now. And so it's just it's a big shift into services almost where inflation is, the demand is getting so high, and then a lot of people are cutting back. You don't have enough people working, right? And so inflation is just everywhere. The pandemic has just reached so much havoc that you're just now starting to really see everybody's coming back to work, right? And so you're having that, and not everybody's coming back, and so that's also the big thing that you're dealing with all this stuff as well. So Google could be potentially good. Retail has been pretty strong today. Amazon, I know Shop got some good news today. They have an agreement. They kind of ripped this morning pretty good, but then didn't bounce after that. So Amazon could be potentially good. I don't like Amazon to split now, so we have to kind of see how this moves. Every time they split, you're diluting the shares, so they don't move as well as they used to. So we have to see how this does move, but it's interesting. As long as it's going to hold above that 118 mark, I think we could potentially start really ripping back up as well. Shop, same thing. It looks just like that. Let's take a look at Apple here. Apple's got this critical level here. It's the 173 mark. If we can break above that, if we can gap up, this could be potentially really good. Apple runs really well into earnings. It's got earnings on the 28th, so next week. So this could really start getting earnings. Most start ripping. Again, you're going to have a lot playing out on Thursday. So Thursday, you really have to be careful on what's going on with ECB. Because if anything, again, bad happens there, this thing could change direction quickly and just start selling. So that's what I'm kind of trying to be mindful of. Instead, try to grab the bottom. You don't know. I'm trying to confirm, especially with a lot that is going on in the current market state. So BA looking strong. Did break, retest, nice rip today at resistance again at the 178. or the 158, excuse me. If we can break that, could potentially get another strong push up to the 200, which is sitting roughly around that 180. So that could be another potential play. If everything starts gaining strength, could just start playing upside. A coin had a massive day today because of Bitcoin. This thing could be good if, as long as it can hold the 63 mark tomorrow. Could get a nice push back up to the 75. And then again, you need that to break and to also break the 81 level, and then potentially start ripping up that way as well. So interesting to watch there. Let me see the banks, JPM, ascending wedge. This thing has been saying, like I said, it looks like a bull flag potentially here. But again, this is so choppy and nasty. It's hard to even gauge what this is. I mean, this is just nasty. It had really bad earnings. But the nice thing is Goldman Sachs, and this is kind of what's been leading the charge here because they did really well. They had a massive run today. Two massive runs. You had one run, pull back, one run. Could potentially have one more nice day up to the 325, then start pulling back. And you have to realize too that after earnings, you're going to have earnings, and then you'll have a couple of days after where the market can continue, or that stock can continue to run, and then it gets in a downward cycle where, like, for the next 3 to 4 weeks, it starts selling again. So you have to be aware of that it does cycle back off and do that. So watching that. BA's Bank of America, break, retest, trying to push up, needs to break this 34 mark. If you can break that, get a nice push up to 36, and then see where we go from there. So that's pretty much what I got. I don't want to go over too much because of the fact, again, this video is already really long. I know I've probably repeated myself a lot of different times in this. There's a lot of different things right now. Again, I want to say we're bullish, but again, you have that dark cloud waiting next week, and you have the ECB could help if they do raise rates big time. Again, that's going to be an issue next week. I think that will kind of be our red flag. And we saw this again last week. We thought we hit peak inflation, and then we get the ECB come out and say, no, we're raising rates, and then it dropped the market. And then the next day, I think we had core CPI that came in over 8.6. It came in at 8.6. So I think it was over 8.3 was the last one that we thought we hit peak. And then we just sold off. And so now we're seeing that again. We're seeing that now play out. But now we have the core CPI, and now we're going to see what the ECB does. And if they raise rates a lot, I can expect the U.S. to do the same, and then we'll see what happens from there and how much we sell off from there. So that being said, I appreciate you. Go ahead and drop a thumbs up. Till next time, I'll see you guys later.